Hey everybody, it's Uzi from the Option Selling Institute. And in this video, let's talk about three stocks that I think are ready for a rebound in the upcoming 2025 year. They've been beaten down hard when many other stocks have been seeing new highs or trending higher. These stocks are in the category of least favored. And a lot of times, when you get possible trend and changes in the new year with where big money wants to put their allocations for the new, for new investments. A lot of times you'll see some of these laggards turn around, and this is an area that's ripe, I think, to turn around. If they've already shown a few signs, I'm going to go over that with you quickly, and let's try to keep this video short. And maybe you'll get something out of this video from some technical analysis standpoints. All right. For the three stocks are DLTR, Dollar Tree, DG, Dollar General, and FIVE, which is Five Below. All right, let's get right into it. Let me pull up some of my charts and we'll get right looking at them. Let's start with Dollar Tree. This is a daily chart going back to the beginning of, let's say, June of this year. And you can see it's had its share of a downtrend going on. It's well below the 200-day moving average here let me get my highlighter, in orange. All right, so the orange is the 200-day moving average. Let me change my color here to yellow. Why do I do this? Okay, let's change it to yellow. Okay, here we go. So here's the 200-day moving average. Let me just diminish that a little bit. Sorry. All right. So the 200-day moving average is right here. Then you have the 50-day moving average in yellow. And then you have the other moving averages, blue, and you can't see maybe fuchsia. And these reds here are the Bollinger Bands. So we've got it on the higher end of the upper Bollinger Band, actually broke through on Thursday. It actually closed again on Friday above the upper Bollinger Band. We have a squeeze going on here. This is a TTM squeeze going on, which is indicative of an imminent move. And we do have tight Bollinger Bands. So this is looking to make a move, I would say within the next week or two, maybe come Monday, who knows? It's within earshot of an attempt for that 200-day moving average. Let me erase some of these stickers, and I'm going to show you another chart of this, which has less distractions on it. But you can see a gap here. Okay, you see a gap here, and you see these Bollinger Bands that expanded tremendously on these two gap downs. It spent its last 6 months or so consolidating with a 52-week low of a little under 60, because it was a little under 60 over here. Actually, yeah, so it's about $60 a share. And now it's beginning a new move, I believe, and it's ready to attack this first gap area over here. Let me just get rid of this for a second, and let me pull up uh, my price level here. Okay, so it's attempting to get into this area, say right about here. All right. Once it gets above there, it's going to attack the price level of about, let's call it $82. So once it gets above this level here, which is about 77.65, let's call it, it then begins to get into the gap and attack that 82 area. And then above that, we have to get above about 89 to attack this secondary gap, which is at about 94, call it 95. And if you'll notice, I'm going to show you in the next chart, that coincides ironically, right? That second gap area coincides ironically with the 200-day moving average coming on a downtrend, though. So it'll be tough to get through that 200-day moving average, but I expect it to at least attempt to get to that area. I can't tell you when, but from the way it looks, right after the new year, it's going to begin, let's say, a move potentially higher. Now let's take another look at a chart. Same another chart, but same chart, but let's look at it on a different platform. And let me show you what I'm seeing here on Dollar Tree. Let me just expand things a little bit so we can widen it out, show you what I'm looking at. What we've got, I believe, is a head and shoulders bottom. Okay. Here's your left shoulder. Here's your head. Here's your right shoulder. Here's your neckline. Okay. Here's gap one. So once it gets through this neckline, we're into gap area one. Equal move target is about this level here, which is, call it 94, okay? And that's the second gap area, equal move area, which also coincides specifically with the downtrending 200-day moving average, okay? If I do one more analysis quickly with this chart before I move on, let's take a look at what it says on some retracement levels. And I guess we can try it from this area first to see what we get. You know what, I have to extend these to the right. Let me just get to my settings on this quickly. Can I extend them to the right? Levels to the right. All right. All right, pardon me, I should have set this up a little bit better beforehand, but I can do it here on the fly. Let's just keep it moving. So let's do it like this then. Let's come from about here down to about here. And we can see what's going on here. The settings seem to be a little bit off on the Fibonacci. Yeah, that's better. So we have the 618 almost lining up with this area. So it's between the 618 and the 88, which would be the 76, I believe. Let me just pull up the 76 on this then and see what we got here. Let's take this one away. Let's give it the 76 level. Let's throw in the 50. Let's throw in the 23 and the 161 and the 38. Okay, there we go. Now I really want to do trend line. Okay, let's do that. Visibility. Okay. So now we have better levels showing. And as you can see, yeah, the 76 Fibonacci lines up exactly with the secondary target of the gap area, which coincides with roughly the equal move from the neckline and the area of this open gap here. Actually, this level here hits it perfectly, if you see that one. So this little gap area here, which is maybe actually the more accurate one now that I'm looking at it. This could be an area of resistance, but now that I'm seeing it, this is where it actually gapped down from. That actually coincides perfectly with the 0.76 Fibonacci retracement from this move here. So this is what I'm looking at when I see Dollar Tree, and I am looking for a move higher into the new year. We've been trading it in the Discord. We've been selling puts and going long broken wing butterflies. We're going to continue to do that. I like this chart, and I think it has potential in 2025. All right, sorry for all this discombobulation getting this thing going here. I should have set that up before I came online, but pardon me for that one. All right, let's go back to now Think or Swim, and let's pull up the next one I wanted to talk about, which was Dollar General. Now, excuse all of the different lines that look confusing to you, but I'm going to illustrate to you what they actually are. So this is a chart of DG, which is Dollar General, pardon me, Dollar General. And you can see again here, we have a descending 200-day moving average way above. We have the descending 50-day moving average, which is starting to level off a little bit. It was an ugly angle here, and now it's starting to mitigate and trend a little bit more sideways. We have a double bottom potentially forming here, low of 72.12 and a double bottom, I believe, over here. Let me just check that price level for you and see what it comes out to be. The price level on this down day here was a low of 72.81. So this would be considered a higher low, but a double bottom higher low right here. So if that holds and price doesn't go below here, we have a double bottom, and we have potentially the beginning of a new uptrend. Now, the difference between Dollar General and Dollar Tree is that Dollar Tree has gotten above its 50-day moving average, as you see. Okay, it's gotten above the 50-day moving average right here, and it's above its short-term, the 8 EMA and the 21 EMA, and it's pushing through the Bollinger Bands. Okay, the Dollar General has not done that. So Dollar General is a laggard, and I believe it's going to catch up. So this one may have a little bit more to get going, because Dollar Tree is in the beginning of its breaking through into that gap area. This one has some room to go before it even attacks the gap area, which isn't until up about 97. So you have a lot of room that it has to start to work on, but it's going to have some resistance over these swing highs. All right, so Dollar General does have potential, but it's got a little bit of more headwinds to get over some of this resistance here. But once it does, and if it can, that should serve as major support going forward. So this is another name I like to look at into the new year. And they're in the space that has been beaten down so badly that their numbers. I'm sure the CEOs and the boardrooms have been working on trying to prop these stock prices up because these fell out of the sky. If you look, Dollar General was once well over $100, into the uh, let's see, where was it? Yeah, $135, $140 at one point. So it got cut in half. So it's got a lot of room and recovery to work on. The nice thing though is that it hasn't gotten away from the bottoms yet, so it's a good area to get in. And I think this is another name that's going to do well in 2025. Now let's take a look at it on TradingView. And here I've got it mapped out a little differently with less distractions and less distracting lines. We still have the 200-day moving average above in orange, as you can see it here. Okay, we've got the 50-day like it looks like any other chart. It's starting to find its way and maybe turning sideways, and then it can turn up. And if it does, that'll coincide with the culmination of this. We've got a parallel downtrend channel, but we've got the beginning of a potential wedge here. Okay, now in this wedge, price can do a few things. So price can it can try to test the lower boundaries a couple times, okay, and break through and then head lower, maybe get back into this area. Or it can test this trend line here a couple times, move forward into that descending upper trend line, break through, come back, retest, and then trend higher and put in some higher lows and then get into this area like that. So this is the number two. I'm going to call this area line here number two. I believe number two is going to be the area we see in 2025. I don't believe number one is going to be the way. I think they're trying to right their ship over there over at these dollar stores. If we do head into recession in 2025, these stores should hold up and thrive. It's where people go to shop when they don't have a lot of funds, in their at their disposal to spend. So this is another name I like going into the new year, Dollar General. And let's take it back now over to my thinkorswim platform and look at the third one. And there's more in this area, but these are the three big ones, I believe, the ones I'm looking at. We have no position on in FIVE, although we have something going on with DG and or had something in DG, and we do have Dollar Tree. But what I see here with five is we've got price well above now its 50-day moving average. It's developed a nice little cushion below, okay, or above, I should say. You've got an ascending 21 EMA, an ascending 8 EMA, and it has pushed through the 200-day moving average on Thursday, closed above, and then with Friday's weak market closed back below the 200-day moving average. We've got a lower Bollinger Band that is heading up, and a higher Bollinger Band which is starting to go sideways to maybe wait for the lower Bollinger Band, and let's maybe start a new uptrend here. Now it did have a gap up here. I have to check for news on what that was. It wasn't earnings, because earnings came out this day, and this is basically the move here from earnings. I have to check the news and see what that gap was, but it did fade that gap up. It closed the gap. It tested the 21 EMA and the lower Bollinger Band, so it looks like it's getting healthier, and it does look like it may have more time that it might need to actually begin its major move higher. But it looks like it might want to just bounce around, go sideways, do some of this sideways action, staying above the 50-day, letting that 200-day curl a little bit up and around. And by that time, the Bollinger Band should be coming like this, and then it can break through this area here of resistance and begin a new uptrend. All right, let's take a look at it on TradingView so it's a little less congested for you. And let me just erase some of this stuff here. Now, what I've got done here waiting for you is the channel or the wedge that it actually has been carving out. It does have some time before it actually meets its apex, which would be, not for a little while. So it actually has some time. It could spend time now heading toward this apex where it could meander. It could be meander about, but I do see a little bit of a nice little, movement here. So it's got a nice little roundedness to the bottom there. It could move around, move around, just test the upper, come down a little bit, try to test the lower, head up, break through, come back, test, and then move up. So this is another name I like going forward. Not as much as the others. It still has this sharp angle to work on. And it might take some time. I mean, it might actually come out, come back around and then do a fake, head fake down and then break higher. I've seen that happen a lot too. So you never really know what's going to happen. But, keep your eyes on this apex, because if it does spend enough time in the apex, all right, what's going to happen is it's going to build up a lot of energy. And as it builds up energy in here, that's going to make that move. If it breaks through the top, much more powerful. That quick retest is your last chance to get it before it heads higher. All right, so those are just some ideas I wanted to share with you. Give me some feedback on this. Tell me if this is some stuff you like to see in my videos. I'm going to be going over, all the trades that we do in the Discord as well, but I want to incorporate some type of other educational type of material for you guys to see, and maybe learn a little bit of technical analysis along the way. All right, so yeah, if you can give me some information, give me some comments. Please like and subscribe so I can build the channel a little bit. And by all means, if you'd like to take trades with us, we do have slots we're leaving open for 2025. We're trying to bring in a good amount of traders, but not too many, maybe up to 50 more. That's about it. You can reach me on Twitter, on X. Here's my Twitter handle, JimTrainer41, Uzi Options. All right, or you can reach me through WAP. This is my WAP website where you can join up. There's a few different plans I offer there. And, reach out to me. You can reach out to me here in the YouTube video comments, or on Twitter if you're on Twitter. And by all means, love to have you in the trading room. We're doing great. We only have 4 losers in the last 8 months since we started the Discord. So we have a great win rate. And we also do futures, options, earnings trades. We specialize in the earnings trades, and we have never had a closing futures options loser. So, come trade with us. Give us a shot. Try us for a month. If it's not for you, no harm, no foul. But if you want to stay with us and start making money in 2025, we'd love to have you. All right, with that, this is Uzi. Thanks for watching. And like I said, please like, subscribe, and leave some comments. And we'll see you on the next video. All right, have a great rest of your weekend, everybody.